Hey everybody, Father of Trades here with Blanche. Yes, we're with Carte Blanche. And today we are going to be discussing RILY. We're going to be taking a little bit of an in-depth view into the assets they hold and making a case why it is undervalued at the current price and where we can realistically see it going forward.
The best way to start this off is kind of to go all the way back to the beginning, assume that anybody who's listening doesn't know the history. RILY was an investment bank that decided they wanted to expand their portfolio. They bought a bunch of brands, they bought a bunch of businesses, they completely overextended themselves. They leveraged one asset against the other, and when one part fell, the whole tower fell. The general thesis I think that we have right now is that the shorts were right at $80. They're right at 60. They're right at 40. They've taken it too far. They're trying to take this to zero, and this is not a zero company. So I think that would basically be our thesis, right?
Absolutely. So what I would say, just to kind of piggyback on that, is I think the way that we met is that I was shorting this at 60 and at 40, right?
Yeah.
I saw this as an awful company at that price, but at this price and with the recent change and turnaround story that's generated in this business, I really think that the selling is overdone. And I think that we are at a point where it doesn't really make sense to short or even to hold a short on a company with such a large and diverse portfolio that is seemingly doing pretty well in their investments and in their book running business. I mean, you could make a case that the market cap should be 4 times what it is.
Even higher, depending on how you want to view the opacity of it. There is a lot of gray area, and we have to give gray area discounts. How you view that and how comfortable you are with a holding company and valuing a holding company is going to kind of dictate how much you're willing to pay on this.
Absolutely. I think a good spot to start here then would be kind of breaking down some of their business segments. We should start with BRS, right? B. Riley Securities, that works in capital markets, investment banking, and mergers and acquisitions.
Yeah. So BRS, they had a whole slew of investment people working for them back in the day, 2 years ago. And during their big shorting, a lot of their top guys started getting headhunted. What the company tried to do then is they did the carve out and they offered equity for the company to their employees to stay. And this is that carve out. Now, this has actually got a long-term value for us that they have done this carve out, because how I was just saying, the transparency aspect of it, it is my belief, I believe it's most people's belief, that in the near term, they are going to IPO this. When the market gets a chance to say, okay, well, this company is drawing in this amount of money, we're going to give it peer multiples. This is now roughly $1 billion company that is inside of a $300 million company.
See, that's honestly something that's very rare to find in modern markets, where everything is overinflated in value. You have things that are trading at forward multiples of 50, 100, 200 in some cases, looking at UAI sector. And then you have something like this, where yes, there are some, debt issues. There were some issues in the past, but when those are being eliminated before our eyes, then you can really find a lot of value in something that has a price to earnings ratio of 3. I mean, that's a rare find in this kind of market where everything is so hyperinflated. And if they ended up IPOing this business, that is going to be a ton of money and a ton of value on their books. And I think that it's very bullish. I agree with you.
We look at them owning 89% of this company. Like I said, if we get a comparable Q4 to what they showed in Q3, $900 million to about $1.2 billion is what I roughly penciled out as what their IPO value could be worth. So if they give up 40% of their shares, the main problem right now with the company is that it has $400 million in net debt. Well, if they sell half of their holding in this, that covers that net debt. So
And you have nothing but free cash flow, high free cash flow, driving profitability and allowing them to invest into their own future to scale revenue even further. So it's yeah, I agree. I mean, the path forward is very clear. It's very clear.
now this is, unfortunately, like as we're saying, we are getting a lack of transparency discount. The IPO is kind of just something that us and others have speculated is going to happen. The company has not said it's going to happen, but we think that, sooner or later the market needs to start pricing it in.
Absolutely. And, I think this would be a good time to go over to our second little segment of the business, which is the telecom and VoIP, voice and proximity. And, I have to say that out of the four kind of pillars of this business, this is the one that personally I am, the least fond of. I don't know if maybe you have a different take, but for me, this is the one that I feel is like the least important. It gives some cash flow, which is nice.
Okay, well, let me appeal to you on something.
Okay.
So Magic Jack, I don't, 2 years ago, before I even got interested in RILY, I only knew Magic Jack from those late night commercials. I was like, who the fuck uses a Magic Jack? Now I've learned that the biggest customers of Magic Jack are families where they have somebody in prison. Private prisons, they have like this insane dollar per minute that they charge you to call.
That is a really, really niche situation, but I guess we're looking at incarceration rates, not so much. That is just a really interesting. I mean, I can see that. I can see that.
If we were in another country, this would not be a revenue generator, but it's America, so
it's a revenue generator.
Yeah,
absolutely.
So basically, that's how it works. Is that you get this? They get the Magic Jack. It gets a local number. The people. It becomes like the number in which they're allowed to call at a lower rate, and it cuts their phone bill calling the people that are in prison like almost down by like 75%. So it's if you think incarceration rates are going to go down, maybe discount it, but I don't see that.
I don't think that's going to happen. I don't think that's going to happen. That never happens.
Yeah.
What do you think about Lingo, United Online, and Credo?
So, okay, the only one that matters there is Lingo to me. Lingo has shown growth. It's funny. Again, this is not a segment that I'm very familiar with, but I've been talked to about it before. They do say that there is a lot of VoIP products being used in different sectors, specifically places that deal with a lot of remote workers. So, as to what that actually means, I don't know. They are showing steady revenue growth. I think more than anything, that's how I look at it is the money is coming in, the money is stable. This is not a cyclical business as
it's some kind of recurring cash flow. And that's what's nice about it. Absolutely.
Yeah. So, and I mean, Bryant was actually saying even, like the last time they did an earnings call, which was almost a year and a half ago, he's like, I never knew how valuable this was going to be to the company. Like he just did it because he's just, he's a bloodhound and he picked up a scent and he jumped on it, which is what he does.
Yeah, absolutely. He's a big part of why I'm bullish on it. That'll bring us over to our third kind of pillar segment of the business, which would be all of the consumer businesses and other operations. So these would be things like Targus, Hurley, Bebe.
The Hurley and Bebe have actually been sold off. We now know.
Okay, those have been sold off.
Yeah. So and for as much as I can see, the only thing that really matters in there is Targus. Targus was bought for about I don't remember. It was about out of 5.8 earnings, and I think that came out to about 450 million. But the problem was it was bought shortly after COVID. So there was a lot of people buying laptops. There was the end of a really big boom cycle. This is a cyclical business where
Absolutely.
when
the new generation comes in, they do really well. But outside of like those refreshes of hardware, it's a little dead in the water sometimes.
Yeah. And so right now, the majority of the business comes from just people, just the random one-off people who are buying a laptop at Walmart, and Targus is the main, charging ports, laptop sleeves, all that's your cell phone cases and stuff at Walmart. So, again, not nothing.
It's not insignificant, but it's definitely not, one of the I guess central pieces of this, right?
If the company was Targus, we wouldn't be having this call.
Literally, I would be so uninterested in this. Yeah. And then I guess that'll bring us really kind of to our last one, unless you had any other operations you wanted to talk about.
You're going to talk investments?
But yeah, so that would be the investments and the holdings in public companies that they have, which really the B. Riley securities and the investments in public holdings, like these are the two big pieces of this company. Right. These are the two things that they do best. Yeah. And, we saw that they have an incredible average and a really massive stake in BW, which of course has gone from sub-dollar to what is it now, up towards 15 again, right?
14. Somebody sold off 1 million shares like 5 minutes before close today.
Yeah, of course. Yeah. They're also, very, very heavy into APLD. They were one of the first ones to make a case on that. And, that has turned out to be an absolute thriving business, right? So I personally, really, when I'm buying RILY, I'm buying it for belief in the investment prowess of the team, right? And of management. Like that's the biggest thing that I'm looking at.
And that was kind of like, that when they were presented with BW and they had to come up with money for BW, this is Bryant not being able to help himself. He sees something that is criminally undervalued, and he says, "Oh, I'm going to give you money for this, and I'm going to take my stake." And that is, that's our turnaround story. Is they are the ones, if you look at their tombstone deals, which is how we can determine, every at the market offering, every IPO, every SPAC they, book run on, they are looking at these companies with a fine tooth comb. And if Bryant likes it, Bryant's buying in. And he's just right so often. Like it's kind of hard to like.
I think that he really kind of takes it's funny because I kind of think that he almost takes like the Ben Graham approach of evaluating a business fundamentally and just parking it, letting it sit, right?
Yeah.
He buys businesses that are overlooked, sometimes distressed, and like you said, he's very often right. So,
and that also needs to be part of our thesis here is they have made their fortune, a large part of their fortune, by turning around near bankrupt companies.
Absolutely.
And now they are the near bankrupt company that they have turned around.
It's funny how things work that way because yes, they have made a lot of money buying these distressed businesses and honestly just fixing them. And now that they have been viewed for the last 2 years or so as a distressed business. And in all fairness, like I said, I shorted this thing down. Like I was one of those people that saw them as a distressed business. What I'm looking at now doesn't really seem that distressed. So, my mind has changed over the last 2 years that you and I have known each other. And when we're kind of placing that valuation on it, like there's a few different things that I think that we can look at, right? You can almost look at like just a base case based on the present valuations. You can look at what would happen if the earnings came out very, very bullishly, right? They're very good earnings, nothing but good news, or rather, some good news, and we had a very slow and mild kind of re-rating of the price. And then there's also a situation where earnings are super bullish, and the BRS IPO is hinted at or announced. And I think that we should talk about maybe these three cases and the potential valuations that they could bring.
Yeah.
So let's start with the base case. What do you think?
My base case on this is the company, if you just look at the trend line, you can see we're just kind of creeping up, a few cents every month. And it would be a continuation of that. That's basically saying the market still views it as too opaque. They don't want to put too much money into a muddy valuation. And so we will continue to slowly climb that $8, that $9. But I don't see, I think base case is still up. I don't think base case is sideways.
I think the base case really, when you're looking at just kind of valuing it at a fundamental basis, I mean, to be honest with you, I think that somewhere around 10 is probably correct. But 8 or 9 is probably safer
I trend conservative.
Yeah, I know you do. Now let's talk about what happens if this earnings, this 10K and of course the quarter 4 2025 earnings come out, and they are not necessarily the most bullish, but they are just clean, and the market begins reacting to it in a mild way. What do you think there?
So I think we need to kind of describe what clean is. A lot of what the EPS has been in the last few quarters it's gotten there through asset sales. Showing a clean quarter where the money is recurring, it's not a one-off, that is what is going to start driving this price up quickly.
Absolutely. And having some clear guidance for the future and reasonable reasonable revenue growth in the future.
And
absolutely,
that's not asking a lot from this company, to be honest.
It's not. Especially after I see what they've done with Bob Wilcox and Applied Dynamics, right? Or Applied Materials,
digital.
Sorry.
Applied Digital.
Yeah, that's what it is. I mean, after seeing basically just how right they've been on that, I really don't see a problem with them continuing to generate revenue. I mean, they're very good fundamental traders. So,
and there is also the wild card that we don't know exactly what Base Electron is, and if RILY has a stake in that. That's a new company. That's a whole another wrinkle that we will see play out this quarter.
Yeah, that's a little speculative now, but I'm excited to see what happens. Yeah. So basically, we would want to look at a clear balance sheet. We'd want to be able to, kind of take away some of that murkiness and make it a little less opaque, like you were saying. And we'd really like to see the debt continue to be paid off, right? All the credit fears being eased, or potentially, having a clear path to being erased completely in short order. And at that point, the market would likely begin pricing this in at a higher PE multiple, because the trajectory of the free cash flow and of revenue scaling higher would be a little bit more clear.
Exactly.
So what price zone do you think that we would land out there? I'm leaning probably more towards like 16, something like that.
I don't think that's wrong. I think you're going to see the market want to move it to that space and how fast the shorts allow you to move it to that space is the question.
Yeah, that's fair. That's fair. So we're thinking somewhere probably mid-teens there. I think you and I both align on that.
Yeah.
Okay. Now let's talk about that third scenario, right? Where earnings comes out, they beat expectations, everything is coming from free cash flow, or rather all the free cash flow is coming from successful investments. They're not selling off big chunks of their business. They're able to provide good forward guidance. We understand, where the money is coming from, and they're paying off debt. And hell, you know what? Let's just throw it in. B. Riley Securities gets IPO'd or announced. It even gets talked about.
Hinted at.
Hinted at. There you go. We'll use hinted at. So where do you think we'd land there? Because to be honest with you, I'm almost leaning towards like 30.
This is difficult.
That's a tough one. I know. There's a lot of variables. It's the best case scenario.
We have 2.5 quarters of data from them. Half quarter, obviously, we just tossed that out. Then we have the 2 complete quarters. If we have a third quarter, which we see continue just even slightly, which Q4 was actually pretty good in that segment. So I think we're going to see pretty solid numbers when they do release the Q4 for BRS.
I think so too.
So you show 3 quarters, a trending line upwards. Again, we get to that 900 million, 1.2 billion mark. Yeah, possibly more. If you say that the company that has what would that come out to? 2.2 billion in assets at that point, somewhere around.
Yep. It'd be something like that.
Suddenly that debt load doesn't look very hard at all.
Correct. And especially considering that we did just get comments from Bryant Riley that they have been paying off the debt quicker than they had initially anticipated. And then of course they were able to eliminate a lot of their debt by converting that debt into common shares to basically pay it off. So that as well was massively beneficial to the company.
And I think that also for people who are looking at this, the people who took that debt to equity swap, they came down, or they took an immediate hit because they believe also that the share price is going up.
Yeah, and that's really the only way that I can see that. I mean, it's very clear that they haven't taken that debt to equity swap and then just dumped the equity as a way to get out, right? Yeah. What they're doing is they're holding it. And there's only one reason I think that you would do that, and it's maybe to help the company along because you see that they're right at the cusp of being able to be re-rated in a really big way. So, yeah. Anyway, what are your targets?
You said 30. You said 30.
About 30. Yeah.
I'm a little below you,
always,
but not too far.
Okay.
But not too far. I would say mid-20s. I would feel comfortable saying mid-20s. I would.
Okay.
Yeah.
Okay. Mid-20s. So 23, 25, 27, something like that seems good. I could see that. I could see that.
Somewhere between 21 and 29. Yeah.
Okay. Yeah. Somewhere in that big range. Gotcha. So, we've talked about a little bit of, about the valuation of this business, but I think that one of the big things to touch on would be just using a very, very basic sum of the parts valuation model for the current assets.
Yeah.
Now, what we would be looking at, I think we could break this into a few different sections, right? One of them being the capital markets platform, including BRS, through cycle earnings is roughly 75 to 125 million. The value range of this would be, anywhere from 900 million to about 2 billion. We could call the midpoint 1.3, 1.4 billion.
Okay, it's a little higher. Yeah,
right?
maybe higher 20s. Yeah,
yeah,
it's a little higher than I was thinking.
Yeah, higher 20s, exactly, higher 20s, man, higher 20s. So then we could also look at the potential for IPO of BRS as standalone, right? And that on its own, with basically, if you compared the broker dealer earnings with any kind of peers, and you gave it a regular IPO multiple, which can have a pretty big range, you're looking at the implied equity of this being anywhere from like 1.2 to 2 billion as well. So that would be really, really big on their balance sheet. In fact, it should already be counted into the company, in my opinion, but it clearly hasn't been.
Yeah, I understand why they are not, but I think the muddy discount right now, I'm going to call it a muddy discount. I think they're just giving way too heavy of a discount. Okay, we've said this. Okay,
I think it's cheap. Yeah, moving on. Yep. Right. So Targus, at best estimates, we would imagine that on a day-to-day basis, it's probably worth about 150 million.
Yeah, maybe
they're
25.
Yeah, something like that, right? It probably changes again as the cycles go through, but we could call it about 150 million. BW, their BW position is worth about 418 million. Okay.
Yeah.
Their position in APLD is worth about 24 million. Their position in BDI is worth about 38 million. So, between listed investments, we're looking at about $485 million just in equity that they hold for other companies.
And I think real quick, I want to touch just BW is only going to go up. Listening to their earnings call,
very bullish.
I was ready to run through a brick wall for that CEO. APLD, we'll see what they do, but this the BW deal is with APLD. We talked about, we hinted at Base Electron, what that could possibly be. And we haven't seen what Bryant has planned for DDI yet. DDI is Double Down Interactive. It's like those online slot apps.
People are addicted to those fucking things, man. People are addicted to them. They will spend so much money on it.
And I have talked to some people who say that there is a move to move it into actual payout gambling in European countries.
That'd be huge.
So obviously, and when you know Bryant and you hear that, he has some sort of inside tracker. I assume he has some sort of inside tracker outlook that way as well.
Absolutely.
So those valuations that you have, those are, as of market close today, but those need to, they
fluctuate. And I think that, obviously the general trend of all of them, if you go and look, is up, right? That's the general trend. So yeah. I agree there. And then I guess the smallest piece of all this would be just kind of their other businesses, right? Like all the telecom stuff, the voice and proximity, advisory services, right? We could probably call that midpoint like 125 million.
Yeah.
Okay.
It's still trending up too on those though.
Yeah, absolutely. Yeah. And that's trending up, quarter over quarter. So when you're looking at the gross asset value, right, and we're ignoring debt, it's just the sum of the midpoints. It is a sum of the parts valuation, a true basic fundamental valuation. It's just over 2 billion. This company's trading at a 225 million market cap and holding $2 billion in assets.
I don't think the debt load's enough to warrant that.
Yeah, and the debt load isn't that big of a deal, right? As compared, I mean, don't get me wrong, it was at one point very substantial, but they have done a very good job of reducing it. They've proven that they are willing to divest from businesses that aren't working, and able to focus and concentrate their portfolio more, kind of alleviating a lot of those issues where things were levered against each other. Um, so again, right, the gross asset value is sitting just above 2 billion. Their net debt right now is, what is it, about 600 million or so?
We assume we've got a pretty big range there. It's somewhere between 450 and 600 million.
Yeah. Well, let's call it 600 million just to be safe, because I'd rather I would rather, yeah, exactly. I'm conservative when it comes to the debt, and I want to assume that they have the higher end of the debt, right? Because I want to look at what my worst case scenario is, and if my worst case scenario is 2 billion in assets with 600 million in debt, I'm looking at a $1.4 billion company.
We need to be very careful that we're talking about net debt there, because
net debt, correct.
They have
absolutely
anyways.
But yeah, so when I'm looking at that just leads me to believe that this company is undervalued. And I think that, for me personally, it's not only a value play, but it's also a bet on management. It's a bet on Bryant. And the question that I would have to ask to anyone questioning the value of this, or questioning my potential valuations, do you think that Bryant Riley is a stupid man? I don't. Yeah. I think he made some bad decisions, but I think that overall, if you look at his track record, like he is spot on, man. I don't think that he's stupid. I think that he is actually a very, very intelligent guy with a really good sense of again, fundamental investing, right? He takes the Ben Graham approach, which is something that most modern investors, they have no idea who the fuck Ben Graham is, right? Warren's like 98. He's of an older generation, it seems, in mindset. And that's something that I really appreciate about Bryant Riley. And that gives me a lot of confidence, right? To know that he is investing in, structurally sound, fundamentally strong businesses that deliver, right? He wants to see the results.
Yeah. And when we talk about that, we really are talking about the bones of the companies, like these. This is when you find an opportunity, is when it's like in a house, you want to find those good bones. It doesn't matter what the wallpaper is, doesn't matter what the paint color is. That's what is selling it at a discount right now. Look underneath this business and
structure. Look at the structure. So, it's like saying, this house is a little bit of a wreck. I would only buy it for 100,000. But what you need to realize is that the land it's sitting on is worth 2 million.
Yeah.
You can't value buying the property just based on the house, because you can always tear down the house and rebuild the house. You could tear down the house and turn around and sell the land under it. So when I'm looking at the way that he invests, it resonates with me personally, in the way that I like to invest and trade. So I'm feeling pretty good about it. If we can add on to that a little bit. Okay.
We always encourage everybody to take, you hear what we say, and now we want you to break down what we say. Look at it from the bearish point of view. And if you go out and you start looking at the bearish point of view, how much of the bearish point of view, how much of the shorts are actually talking about Bryant, the CEO? This has actually become a personal issue for the shorts. This is no longer, we believe that the short case has disintegrated. And now the people who are still holding on to the 25% short interest are doing so based off of their dislike of Bryant. And their dislike of Bryant stems from the fact that shorts have been short before on these companies, and he has turned them around. This is a personal issue for them. So yes, there are legitimate muddy facts that we still have to dig through. There are legitimate debt issues that we have to dig through. But I feel at this point comfortable with those numbers, and I'm not going to lose my money over some personal beef that these people have.
Yeah, and I think that when we're looking at this business, it seems as though they're doing the right things, right? They're paying off the debt. They're doing debt to equity swaps, right? They are doing the right things to right the ship, get us trailing in the right direction, and I have the utmost confidence. I have the utmost confidence right now. So that's kind of my final thought about that. It's really, really hard to find a company holding $2 billion in assets with like a base equity value of 1.4 billion, trading for under 250 million. I mean, that's just not something that you find every day. And when you do find it, it's never going to come without issues. But the question is do you think that Bryant Riley is a dumb man? And if you don't, then you and I agree, and you're probably long or about to be long.
Yeah, I'm good. I think that's it for me.
All right, everybody. Well, thank you so much for tuning in. I hope you have a wonderful day. Be sure to like and subscribe. And if you have any comments, please post them below. Let's hear what you got to say.
Right.
Peace.
Have a good day, y'all.
Cheers.